Hello everyone, I am Aarti Kothawde, lecturer of Bookkeeping and Accountancy from Arihant College of Arts, Commerce and Science, Camp Pune. Today, again I am here to explain you the further remaining adjustments such as unrecorded purchases, unrecorded sales, capital expenditure included in revenue expenditure, revenue expenditure included in capital expenditure, bills receivable dishonored, bills payable dishonored, deferred expenses of advertisement paid for 5 years, revenue receipts included in capital receipts, example, sale of goods included in sale of furniture, commission to partners as percentage of gross profit or sales, and so on. Students, already I told you the trial balance gives only one effect and the adjustments gives two effects. So, we are going to see one by one adjustment with these proformas. First one, unrecorded purchases. Now, whenever the goods are purchased on credit and that accountant or the businessman forgot to write in the books of the accounts, that time we have to add to the particular purchases and simultaneously our creditors also get increased, so we have to add to the creditors also unrecorded purchases. Here how we give the effect to the two effects to the unrecorded purchases. In the same way, we are going to see the next adjustment, unrecorded sales. Whenever the sales made during the year but it does not enter in the books of the accounts, that time again we have to add to the particular sales, then our sales will get increased as well as our debtors will also get increased. That is why we have to give the second effect under the balance sheet asset side, add to the debtors, that is unrecorded sales, and our total will get increased by that amount. Here how we, in this way we give the two effects for the unrecorded sales. Now the very important entry, capital expenditure included in revenue expenditure. Students, first of all we should know what is capital expenditure and what is revenue expenditure. Listen carefully. A capital expenditure is an amount spent to acquire a long-term asset such as equipment or buildings, machinery, etc. Usually, the cost is recorded in a balance sheet account, that is under the heading of property, plant and machinery and the equipment. Now, when this capital expenditure has been included in revenue expenditure, then again this has the two effects. We have to deduct from the wages under the trading account, and we have to add to the particular machinery. That is why we give the second effect under the balance sheet asset side. See the next adjustment. In the same way, revenue expenditure included in capital expenditure. Now, in previous video we have seen the meaning of capital expenditure. Now we will see the meaning of revenue expenditure. A revenue expenditure is an amount that is spent for an expense that will be matched immediately with the revenues on the current period's income statement. See, examples of revenue expenditures include the amount spent on repairs and maintenance, selling, general and administrative expenses. Now, whenever these revenue expenditures included in capital expenditure, then what we have to do? We have to add to the particular repairs and maintenance, that is the repairs to machinery account, and deduct from the particular assets, because it is not a capital expenditure, it is the revenue expenditure. That is why we have added to the repairs under the profit and loss account, and we have to deduct from the machinery under the balance sheet asset side. Now, bills receivable dishonored. Here again we have to give the two effects. Now students, in the previous adjustments, what we have done, we have given the two different effects under the different heads, but here we are going to give the effects under the one heading, that is the balance sheet only, because bills receivable is the current assets. See here, when the bills receivable gets dishonored, that time our debtors will get increased and our bills receivable will get decreased. That is why we have added to the debtors account and deducted from the bills receivable account. In the same way, we have to give the effect to the bills payable dishonored. Only the difference is that under bills receivable, we have to give the effects to the debtors as well as bills receivable. But here we have to give the effects to the creditors and the bills payable. We have to add to the particular creditors and we have to deduct from the bills payable when the bills payable gets dishonored. As you must be knowing, dishonored means whenever the debtors doesn't pay the money on due date, that time that bill gets dishonored. We will see the next adjustment. Capital receipt included in revenue receipts. As we have already done one adjustment, that is a capital expenditure included in capital or included in revenue expenditure. In the same way, we have to give the effects under the trading account and the balance sheet asset side. Here, one example is given. Sale of assets is included in sale of goods. Now, whenever we write the sales, we have to write only the sale of goods only. It is not the sale of any asset. That is why if that has been wrongly included in, then of course we have to deduct from that particular sales. Here by mistake we have written two sales, but it is the buy sales only. Now the second effect will go to the, as we have sold that machinery, that is why we have deducted from the particular asset, that is the machinery. So our machinery will get decreased. Then commission to partner. Here whenever the partners decides that they are going to get the salary or commission, so that time we have to give the effects to the profit and loss account and the partner's capital account. As commission to the partner is an income from the point of the partners, but it is an expenses from the point of view of the business. That is why we have debited to the profit and loss account as it is an expense, and we have credited to the partner's capital as it is an income for both the partners, that is the A and the B. In the same way, we have to give effects to the salary to the partner. If the salary is also there, then we will debit to the profit and loss account. In the same way, salary to partner A, salary to partner B, and we give the second effect to the partner's capital account also, that is the buy salary, and we will write the amount under the partner A and the partner B. Here, how we have learned so many adjustments which give the two effects. Students, always remember that you have, while solving the problem, we have to first read the trial balance carefully. Then whatever the adjustments are there, we have to tick mark that particular adjustments and give the two effects for the same. And definitely you will get the correct gross profit or the gross loss, and then correct net profit or the net loss, and your balance sheet will get tally. Thank you very much.